Rick Santelli here live at CME HQ with the breaking news on this Friday Eve on the trade balance. And do remember, last week's advance only included goods. This one includes goods and services, comes in at minus 61.6 billion. That's about 5 billion less than we were expecting in terms of the deficit, but it does follow a revised 138 billion with a minus sign that was 140 billion, and that, of course, was an all-time record trade balance of goods and services. And as you can see, it has now been cut by more than half, and the big drop in imports seems to be where everyone's pointing. The big news there is how much it bolsters GDP. Just look at Atlanta Fed GDP now, which is at 4.64%. Non-farm productivity comes in much more negative than we were expecting. We were looking for a number that was down somewhat less than 1%. This is minus 1.5%. That would be the worst productivity going all the way back to, going back to the second quarter of 22 when it was minus 3.3%. And here's something interesting. Everybody knows that it's the special sauce of the economy, but consider this. In the 4 quarters preceding COVID, productivity averaged 3.5%. With this current number at minus 1.5, before that, when this is a final read, when it was minus 0.8, the 4-quarter average came in at 1.5%, a full 2% less productivity than we had pre-COVID. That's something to pay attention to. Unit labor cost, 6.6%, a little higher than we were expecting, the highest since the first quarter of 24. On initial jobless claims, up 8,000 from 239,000 to 247,000. We still haven't been over 250 since October of 24, but we are inching up very close to it. That's what comps on this 247,000, by the way. And on continuing claims, we remain this is the second consecutive month over 1.9 million, 1,904,000. So we've had 2 consecutives. We've had 3 readings. One of them was canceled, but this all comps to back to November of 2021. So even though we could still say well-behaved on claims, it's not as well-behaved. Interest rates, well, they're moving down just a smidge. The ECB cut, that put a little pressure on the rate structure. Yesterday, we closed 2s and 10s at the lowest yield since the 7th of last month. Joe, back to you.
I don't have Truth Social, Rick, but I'm expecting we might get something.
I don't have any social media. My life is uncomplicated.
I know you don't. But when the ECB cuts and then these rates are coming down, and we're going to see a too late pal, I think, tweet, or what do you call a social media post? It's not a tweet, is it? A tweet's not, Twitter's not Twitter. Rick, that Atlanta Fed number is crazy. Is that so it's the end of July? Our next guest clued me in on that. There's a lot that can happen between now and the end of July. What would the president say if he got a close to a 5 print on GDP? He'd go nuts.
Oh, yeah, he would. But see, here's the issue. And this is going to be an issue for this administration. You want the economy to hum along. You want it to do better. And with the import dropping the way it did, pushing GDP up, there's a lot of moving parts, actually, to how much is going to come through. But let's say he gets a very wild, strong print. That's going to make it much more difficult for the Fed to lower rates. And we know he wants the Fed to lower rates. He's stressed how many times the ECB has already cut. And in this instance, I'm not sure I can agree with the administration in its entirety. I'm more in agreement with the Fed. Oh, my God, did I actually say that? I'm not all that fond of a quick cut. I think that there's aspects of the economy that are doing well. We're still looking at equity prices that have been quite resilient. You know, the equity markets have been so much smarter than the analysts. I'm just thinking that I agree with Powell. I don't know that we need to be in a hurry. However, I do think some of the inflation pressures are going down. And if everybody recalls, before this administration was in power, what did I always say about inflation? That we screwed up our energy, we screwed up with EVs, we made a double standard that was taking away from both sides, and there's going to be an underpinning of inflation in the energy sector. Well, this administration is negating that, and kudos to them. And I think that that is potentially an outlier to get this much closer to the Fed's 2% level. So Powell, as he kind of finishes up his term, is going to have quite a complicated process to deal with.
Yeah, I'll take oil prices any day over tariffs. One time, in terms of the overall effect. You stay at 60 or below on oil, the world runs on it. For more
absolutely.